Hi, everyone, and welcome back to the AI InterConnect podcast. I'm your host, Lauren. This show is where we sit down with founders, investors, and operators who are actively building the future of technology and business. At AI InterConnect, the goal is simple: real conversation with people who are shaping industry, sharing the lesson behind what works, what fails, and what comes next. Today, I'm joined by Radhesh Kanumury, managing partner at Suvan Ventures. And Suvan Ventures is an early stage venture capital firm investing in AI first B2B startups, helping founders scale globally with capital, guidance, and network support. Radesh, thank you for being here. Very, very happy to have you on the show.
Thank you, Lauren. My pleasure to be on the show, and thank you for having me.
Wonderful. Um, let's start with your background so listeners understand the path that led you here. Radesh, one thing I noticed when preparing this conversation is that many venture capital partners come from very different paths before becoming investors. And Radesh, how did your background and early professional experiences eventually lead you to build and lead Suvan Ventures?
Yeah, no, I think you're bang on. I'm one of the few investors who come with a strong operational technology background to become a venture capitalist. So I'll give a quick background about how I started my career in IBM, and then how I landed up in the venture capital role. So I joined IBM in 2000 as a tech specialist. I was implementing ERP solutions for enterprises. I had 4 live successful implementations. I had a very broad exposure around different processes for a industry, for a enterprise company in an industry. And after that, I graduated myself to become a software architect in the software division of IBM. There I was architecting solutions around application servers, databases, portal, content management, security, infrastructure management, and then business intelligence, data warehousing, etc. Did that for 12 plus years. And after that, this role for heading the IBM India Accelerator program came up. So I took up that particular role and basically scaled that particular program with zero presence with startups in India to having 1,100 startups part of the program. And I also conducted India's first nationwide B2B startup challenge, which turned out to be pretty successful. And a lot of companies that I had selected went on to raise their follow-on rounds, and some of them are beyond Series C, D, etc. The value of these companies is north of $6 billion now. And during this period, I felt there is a gap for a very focused investment and mentoring for B2B SaaS companies in that during that time. It was around 2017. That's when I co-created a fund called Arca Venture Labs with 3 other partners who were basically funds. And the whole thesis was to invest in early stage SaaS companies operating between India and US corridor. And so that was my entry into the venture capital world. And we made 27 investments under my leadership, out of which we got 5 exits, and then 15 companies got their follow-on rounds from some marquee investors. And subsequently, Suvan Ventures was formed. The thesis is, I think you mentioned it, the AI first SaaS companies having development teams in India, but looking to the global markets. So that's a quick journey about my starting as a tech specialist to now a venture capitalist.
I love it. Beautiful, wonderful. Okay, then you know a little bit everything on tech, obviously. And okay, when I first researched Suvan Venture, what stood out is the focus on AI for startups and cross-border funders, which is very specific positioning. Radesh, when you explain Suvan Venture to someone outside of the venture capital ecosystem, how do you describe what you actually do and the kind of funders you want to support?
We primarily look at early stage. Typically, if they have their MVP in place and they are actually looking into the global markets, that's the basic criteria that we look into. And then we are looking at AI first SaaS companies. This could be across different horizontals like generative AI, cloud infrastructure, to DevOps, to security, to verticals like healthcare, Industry 4.0, fintech, to functions like sales tech, marketing tech, future of works, etc. As long as they are having an AI first companies solving specific problems across these areas, and they can be pre-revenue, but at least we try to see that they need to have their MVP in place. Otherwise, there's a lot of noise level that goes up, and then we look into try to see the founders. A lot of weightage goes to the founders and the total addressable market that these guys are working on. What's the competitive landscape? What are the kind of differentiations they have right now or they can bring in the future across different areas? So these are the areas that we kind of look into for founders, and we say that at least they need to have a development team in India to begin with. It could be a small team as well.
Okay, that's great. What type of a startup benefits the most from your support?
I would say that early stage, when they are having like pre-revenue, very early revenues, those are the companies, and our ticket size is usually 200K. So we provide the 200K, and then typically the round size is somewhere between 500K to 1.5 mil kind of round size. So this ensures that the company has decent runway for north of 12 months to 18 months. And that is good enough for them to take to the next level of milestones in terms of revenues. And what I personally have interviewed more than 3,500 plus B2B SaaS companies, has been the investment lead for 20 plus SaaS companies. So what we provide is inputs around product to product market fit, GTM strategy, branding, messaging, etc. And we provide them as inputs. We don't want them to be binding. Finally, it is the call of the founders to how they would like to navigate it. So we always consider them as their extended team on the strategy side. And that's basically one of the areas that the founders can benefit besides the capital that we provide. And we also have credits with a bunch of cloud providers that also helps the founders in their improving their runway. And then we make introductions to prospective uh, clients, prospective investors who can come on the follow-on rounds. So all this really help the founders uh, in the journey. So I would say that one introduction that comes in early in the life cycle is almost equivalent to 10 introductions when they are at the Series A level. And one right decision in the early stages supremely beneficial because that can change the complete trajectory of the company.
Wow, I love it. And okay, well then, what truly differentiates your approach compare with other early stage investors?
So I would say that, as I was mentioning, we are one of the few investors who come with a strong operational background. You heard my journey, and then Piyush is the other managing partner at Suvan Ventures. Piyush brings in with him a very strong operational background and B2B SaaS companies. So one of his companies got acquired by Ariba. And then he had his another company which was acquired by IBM. And Piyush is also has been on the board of several SaaS companies. So he's a hardcore operator. So one is that we are completely focused on AI first SaaS companies. We don't look any company outside that particular uh, thesis. And then we have built our expertise around working with early stage SaaS companies by providing them with hands-on mentoring and then all the necessary introductions to prospective clients, investors, and partners and people in the ecosystem. So that I would say is a strong differentiation for Suvan Ventures.
Yeah, definitely. I really like it. Okay, then running a venture fund is often perceived as just selecting companies and writing check. But in reality, the operational challenges beyond that are much deeper. Radesh, right now, what feels like the hardest part of running and scaling Suvan Ventures?
So I would say that hardest part, according to me, is the fundraise. It's not easy to raise the funds. So that I would put in as the hardest part. The second probably would be around selection of companies. Third would be scaling these companies to their next milestones. So, and then operational stuff as actually, that's fine, I guess. You kind of have companies like Carta, etc., which help in the operations. And then you also have they take the assistance of different legal teams and CPAs, etc., to do the filing, etc. You basically have to coordinate that. But I think the fundamentally, if you ask me in the order, these are the top three challenges for a venture capitalist,
Okay,
at least for
yeah.
us. Yeah.
Yeah, yeah. No, it makes sense. It makes sense. Is the challenge more around deal flow quality or funder readiness?
Yeah, I would say that
The
like
two of them.
between the two, if you're asking me, I would say the founder readiness is deal flows. You get a lot of them, but I think the quality of the deal flow is, especially the founder readiness, is super critical. You have the first time founders who are still not got their revenues, so they live in their own world sometimes, and so you feel that they're not really ready for the kind of problem they are solving in. So that requires a further due diligence on our aspect to see that we select the right companies. So what happens is that it goes through our lenses, mine and Piyush's lens, and sometimes we put them in front of subject matter experts if we want to do further due diligence on the product or product market fit. Sometimes we also put them in front of prospective customers uh, to see if they really see that pain point of what the founder is claiming to. So there's a lot of filters that one has to cross through before we make the investment.
Yeah, yeah. I love it. Okay, then where do you see the biggest friction today between funders and investors?
Um, I would say that personally, for our founders, there's not been much of a friction. So we normally
Okay.
uh, assemble, we have a catch up call at a frequency that is mutually decided. And then we try to go through some of the points of their organization, and they also raise up some of the areas of their resistance. So, yeah, I mean, I personally have not seen much of resistance working with founders or
Okay.
friction, I would say.
Yeah. Yeah. Okay. Okay. It's interesting. Has the explosion of AI startups made your investment process easier or more complex?
Yeah, it has made, so I would say easy and complex both, because easy because we are easily able to do the due diligence much faster and better. And then we actually, all the terminologies for a specific industry or a specific area, we are able to learn much faster. Um Complex, because we really want to know the what is the real differentiation or the IP that the company has built. It should not happen that they are just giving some API calls to an LLM and then getting the output. So many times, so I personally go very thoroughly, I insist on a live demo instead of a recording. And the demo, typically the founders will show that, okay, this is the input and this is the output. So we really have to really dig deep and try to understand what the IPs that the company has really built. So that has made a little complex in terms of evaluating companies.
Yeah, yeah, for sure. Okay, then because you are constantly evaluating startups, you probably see signal earlier than most people in the market. From your vantage point as an early stage investor, uh, what shifts in the AI startup ecosystem matters the most right now, but is still underappreciated?
Yeah, I would say that the trend we are seeing right now is that there's a new concept called lean AI startups that has come up. So, which means that teams with size of 25 to 50, they are able to generate a revenue north of 5 to $50 million in ARR. And so this is very interesting trend that we are seeing right now, and not sure how much of uh, whether it's going to be the mainstream in the coming days. And we are trying to analyze, why is it a pattern that is very specific to an industry, or is it a pattern that could be applicable to across different industry aspect, and why is it possible now versus earlier it was not possible? Is it because of faster generation of the product, to having agents to do a lot of work for a startup? So that's something that we are trying to analyze. And what we are also seeing is that there is another concept called seed strapping. So you must have heard about bootstrapping, but seed strapping is where companies are saying that we just need 500K to $1 million to achieve our next milestones, which could be like going till the Series B. And that is good enough for them to have a good amount of runway. So it very runs very well with the way things are shaping in the lean AI startups. So that could be also, if that is again going to be a common mainstream thing. So you might see that how venture capitalists operate may also uh, change. For us, we are already in that seed strapping zone only, but funds which are larger funds, which are having a ticket size of 2 million plus, so they may have to, there could be some like rejig in terms of how they will be operating.
Yeah, yeah, very interesting. And are there areas where founders are overreacting to hypes?
Oh yeah, yeah. I mean, you already said, like I've seen bunch of these companies where they are putting a wrapper around an LLM and then claiming to be a true solution solving for legal or healthcare. That actually is uh, not encouraging. So I would say that if you are building a startup, first is that obviously you have to think through the pain point, how deep the pain point is that you're trying to solve. And then what is the IP that one would like to build? I would say a significant amount of IP needs to be built outside the LLMs. So it could be a strong IP on building a RAG pipeline, building models on top of those RAG pipeline, or putting them in front on a repository which is uh, having its own machine learning models or NLU algorithms in place and working in conjunction with LLMs, or is it like a how very complex workflow that they have been able to form working in conjunction with different applications and different databases, and then coming out with an output which is probably not been that easy with the earlier business process modeling workflows.
Yeah, awesome. What signals do you personally track before deciding to meet a startup?
So one is the problem statement, and so with this new development in AI, you typically will have a lot of the current functions that are being done by solutions or companies can be relooked with the help of the new enhancements in AI. So one is that solving a problem which has not been solved earlier, but with the latest enhancements with tools, especially AI tools, now that can be solved through. So we look into that aspect first. If there is generally something that is in place. Second is what IP they have really built. As I was mentioning, around the IP around RAG pipeline, or it could be around complex workflows, or it could be on fine tuning a specific LLM to create their own small language models, etc. So these are the different aspects that we look into, and then a very strong emphasis on the founder, their ability to. We try to judge their ability to execute on different aspects of a company, and then we look into try to see if there are like a very like strong total addressable market. That's another positive signal that we look into, and we also look into the current competitive landscape. If there are a lot of players, but there's still a lot of the total addressable market is significant enough, that's also fine with us. And then we try to see what differentiations these companies can bring in or currently they have, and differentiation can be in product, in terms of IP, or in terms of technologies, in terms of how they're servicing the customers, or is there a specific segment of customers that they're looking into which has not been catered to. So yeah, multiple factors that we look into before we go ahead and uh, make our investment.
Yeah, thank you for the insights. Yeah, very interesting. What misconceptions do many founders have about venture capital today?
I would say, I mean, it depends on the maturity of the founder. Uh,
Yeah.
so the founder is mature, I would say that uh, they will kind of try to position it the right fashion. But some things that I'm seeing right is that they have this conception that venture capitalists probably don't understand technology. So or they may not go into detail of a specific aspect. So that probably could be a misconception.
Yeah, to be wrong in your case. Yeah, exactly. Um, okay, then, yeah, every venture fund eventually reaches a moment where the focus becomes sharper and the strategy becomes clearer. Um, Probably your case. Then, looking ahead over the next 12 to 18 months, what does success realistically looks like for Suvan Venture?
I would say making few more investments and then having few of our earlier investments. So we made 4 investments and we plan to make another total. I think we plan to make around 14 investments, 13 to 15 investments, I would say. So what would we expect is that some of our companies might be acquired and at a good outcome for the fund, or some of our companies might go for their follow-on up rounds at a higher valuation. So these are some of the things that we'll look out for in the next 18 months.
Okay. Is it investment only in India, or it could be in the US or all over the world?
Yeah, we can invest all over the world.
Okay, wonderful. What? Okay, then what type of funders or sectors are you especially excited about right now?
So I would say that healthcare is pretty exciting, and there are a lot of areas for disruption. Similarly, finance. There are different aspects of finance that could be areas for look, which we feel could be uh, one can achieve differences. So I think what we have done is that we have come up with different investment theses. So ESG tech, uh, commerce tech, finance, automotive, legal tech, DevOps, uh, uh, CDP, configure price, CPQ, sorry, configure price code. These like so we have come up with a bunch of areas where we think uh, if we find companies in that areas, we'll go ahead and make the investment, provided we like the founders and the way they are thinking about the process.
Yeah. Okay. Yeah, very clear. Um, what are you deliberately not focusing on anymore?
If it is not having much of AI play, then we are not. I mean, doesn't excite us. And if they're not looking at global markets, that doesn't excite us. Marketplace also doesn't really excite us. So this is some of the areas that we kind of trying to stay away.
Okay. Yeah, fair enough. If constraints disappear tomorrow, what initiative will you accelerate first?
What kind of constraints?
More more money. Well, the opposite. If disappear, more money, more time.
Yeah, so that if there's more money and more time, probably will increase our ticket size and go for more number of investments, and probably start up like a incubator where we'll just provide them with mentoring. And if they are really ready for their next stage, and that's when we go ahead and make the investment. So those are the experiments that probably we can do.
Okay. Yeah.
So
Very good.
basically, we will look at companies at -1 stage as well.
Okay.
So currently, we are looking at
Many.
0 uh,
Yeah.
or maybe 1. So we can go up to -1 when they're still in the concept stage, and they can look at incubating. We can look at incubating those companies.
Okay. Okay. Very clear. I love it. Many funders listening to this conversation are building companies and thinking about funding and scaling. Based on everything you have seen so far, what should funders building early stage startup start doing or stop doing when they approach investors?
So one is have a clarity in their thought, what they need to present, and also have a clarity on the demo part. Uh, so I always tell founders to have uh, like a demo version ready with their demo data, etc. and that actually takes them takes. So just think about it as how you would how you would show a demo for prospective customers. On similar lines, they also need to think about preparing a demo for investors, so that will really show a lot of credibility in what they're building. And then, as I was telling, having the clarity of thought on presenting about their problem statement and how they're solving it and their background. And they should be really to the point for when particular question is asked. They shouldn't go about rambling things. So yeah, that's what I would some of the points I would recommend them.
Okay. Yeah, and then my question is, what mistake do you see repeatedly in early pitch conversation?
Uh, so again, the lack of clarity is something,
Okay. Okay.
and
Yeah.
even when you are pointing that, I mean, I have many years of industry experience and working with enterprise CIOs and CXOs. And I have personally worked with a lot of industry processes. And then I tell them that this is not how it works. And then there are some founders who insist that that's how it works. So that's a big negative, uh, like, uh, negative point,
Yeah.
I would say, not to go ahead.
Okay. Yes. Um, okay, then about you, what habits or approach makes a founder stand out to you immediately?
Yeah, so if they are really have that, so many times I see that the slides are great, they're articulated very nicely, but when it comes to the demo, it completely flips the story. The demo is not even close to what they have told their solution will do. So that's a big, I would say, a negative uh, uh, points for the founder. So have that consistency in what you're presenting and what you're showing in the demo. That's super critical. So that's one thing. And so on a base level, they should be looking at a very deep problem statement, and looking at having a strong differentiation. Maybe not now, but they plan to build those differentiation, and then have that clarity in thought process, and then followed up with a demo when what they have been talking, they actually show that in the demo. So that's what I would say, all the ticks for a founder.
Yeah. Yeah. No, you're right. If you could give one piece of advice to your younger self starting again, what will it be?
That's a tough question. uh, I don't know. I have been organically going through my career. Maybe I should have made that switch to the venture capital world a little earlier. But it's also not that often that you'll find a person working as a software architect
Right.
in the software division getting into the venture capital world. So yeah, it's maybe I should have started my own company when I was younger. That's what I would say.
Okay, no, no, you were very busy, IBM and many things. Then you had your handful. Radesh, thank you so much for joining today. A strong insight into your journey, your perspective as an investor, and the work you're doing with founders through Suvan Ventures. Thank you so much, Radesh.
Thank you, Lauren, for having me. It was a pleasure talking to you.
And where do people can find you or get in touch with your work?
Yeah, LinkedIn is there. My website is there. If they want to apply for investments, they can always apply through. We have a link for people to apply. So yeah, that's how
Won-
they can reach out to me.
Wonderful. Wonderful. Radesh, thank you. Thank you so much for taking the time, and see you very, very soon.
Thank you, Laurent.
And that's it for today's episode of AI InterConnect. And if you enjoy it, share it with someone who's building the future, or better yet, someone who should be. And until next time, stay curious, stay creative, and keep building. Thank you. Bye bye.
Bye.